In this week's episode of the Stockscores Market Minutes, I'm going to show you some simple techniques to allow you to predict where the market is likely to go. Plus, we will use those techniques to analyze the overall market. We'll look at the day trade of the week on PLTR and then do a Stockscores market scan in search of trading opportunities. So you may remember from last week's Market Minutes, I suggested that the market had a good chance of moving up this week. Well, how did I come to that conclusion? It's really using a few simple techniques that I can teach you, and I will try to do so now. Those things are trend lines, emotion, support and resistance, and abnormal activity. Now, these things always make more sense when we apply them to a chart. So we're going to go through some of the market charts on different time frames, and I'll show you how trend lines, whether a market is overbought or oversold, whether there's abnormal activity, breaks of trend, that sort of thing, how they come together to determine where the market is likely to go. So jumping into a chart of the S&P 500, the first thing we're going to do is draw a trend line. Now, trend lines start at the high on the chart, typically, and you just draw a line across the tops. And there is our first trend line. Now you can see that we have another one that kind of goes like this. All I'm doing is taking these points, the tops here, and drawing a line across them. Now we get into some of the simple rules around whether a market is overbought or oversold. Oversold occurs when price is far below the trend line. And that was my primary motivation last weekend for my expectation that the market would bounce back this week. Now here is how we see that. On this chart right here, this is Friday, we were far below this downward trend line. And so that means that the market's oversold. Now we then look for signs of optimism. Optimism occurs when there is a rising bottom building on a chart. So for example, here we have a low point, and here we have a rising bottom. So now we are breaking this steep downward trend. We're still quite oversold because we're far below this downward trend, and we're building a rising bottom. Now notice throughout the downward trend that has sort of been in place since middle of October, we've always had falling bottoms. This is the first bottom that's rising. And we've also always had falling tops. That is a sign of pessimism. When you have falling tops, there's pessimism. When you break the cycle of falling tops and start to build rising bottoms, you're setting up for a bounce back. Now, we also have to think about horizontal support and resistance, and this is where the longer term time frame is of assistance. You can see that we had horizontal support here. So remember, on Friday, we're basically there. We were oversold and falling into support. Now we know as a general rule, when markets fall into support, they usually bounce at support. Now the converse is also true. When a market rallies into resistance, it usually gets stuck at resistance. And so if we look back at the chart here, you can see that this rally that we've had this week is great, but it's now coming into resistance, and therefore we are likely to see a reversal in the near term. Now there is no sign of that yet. If we go back to the shorter term chart, we still need to see the break of the upward trend line, and it's just about happened. You could argue that it just is tickling through that upward trend line, and we're starting to build a falling top. And so if we can break down from this falling top, breaking the upward trend line, given that the market's had a big run to the upside, then we may see some weakness this week. Now we can also look at the very long-term time frame. This is the weekly chart. Apply those same techniques. Start with the build of a trend line. And you can see that the trend line was broken last week. And so that's why my longer-term outlook was for weakness. Remember last week I said short-term, I think the market's going to bounce back. But longer-term, I am concerned because we have broken this upward trend line. Now this week we made a great comeback that almost negates the breakdown last week, so we got to watch it really closely. But on this weekly chart, we have a falling top, we have a break of a trend line, we are pretty overbought because we've come up so far, not really in the sense of what I spoke about in the last chart, but This market has come up a lot since the comeback from the COVID crash. And now we're starting to mess around with this long-term upward trend line. So a lot of reasons to be concerned, but no reason yet to be running for the exit door, because we really don't have that strong sell signal yet in the short term. That sell signal could come on Monday, Tuesday, any day this week. So watch for it. If it doesn't happen, then we stay fairly optimistic because the comeback has been good. All right, now let's get into this week's normal market analysis. And normally I would do the S&P, but I'll skip that because we just did it. Here is the NASDAQ chart, and you can see the great comeback. And again, there was the downward trend line. We got oversold because we were far below the downward trend line. We made a double bottom. We broke this steep trend line here, and then on Wednesday we broke that, and we've been moving higher ever since. That's great, except now we are coming into resistance at the highs from the middle of October. And so we have to watch for this upward trend line to be broken, preferably from a falling top. If that happens, then we could see some weakness this week. Hasn't happened yet, but keep an eye out for that. On the longer term chart, much like the S&P 500, it broke an upward trend line, building some falling tops. This week's comeback was very good. So again, we still have rising bottoms here. We'll see what happens. I'm curious to see if we can break through this, or if instead we get a second signal breaking down through 270. This would be negative. This would be positive. That's what we're going to watch for. Russell 2000 managed to break to a new local high here, just barely. Got rising bottom, so that's optimism. A little bit of volatility at resistance, probably pulls back in the short term, but this chart actually looks a little healthier than the big cap index charts like the S&P and like the NASDAQ. The small caps actually look like maybe there's some money flowing into them and out of some of those large cap names. All right, on to the Canadian markets, and here is the Toronto Stock Exchange. Good comeback from being oversold. Another way that you can see oversold is if the trend line goes curved, parabolic to the downside, then you break that, build a rising bottom, break from a rising bottom, up goes the market. We are a longer distance away from resistance, so there's no great concern about that yet. We have to still watch to see if that upward trend line gets broken. Looking at the longer term chart, we see that negative signal that we got last week, or the week 2 weeks ago, falling tops, breaking through support. That is a concern. We made a comeback this week trying to hold, but we still have to watch this very closely. I do think there is risk in the Canadian market. On to the TSX Venture. Of course, we had a big surge in the cannabis stocks this week, and that's been, I would say, the motivating factor for this market to move higher. It's still below resistance, but there is some pockets of strength in that cannabis sector, and we see that in the chart, although it's still not breaking out, so don't get too optimistic. On to currencies. US dollar fell off a little bit, is now testing the lows. It's at the lows, so it should bounce, but if it breaks down through the lows on this chart, then I would be concerned that the US dollar is going lower. Of course, speculation that now that the US election is passed, there will be some stimulus, and if there is stimulus, then that of course would help things like gold go higher, but also make the US dollar go lower. All right, the Canadian dollar benefited. Of course, strength in gold helps the Canadian dollar, and weakness in the US dollar, of course, helps the Canadian dollar. It has risen up to this short-term bit of resistance here. We'll see if it can break through that, but we have a little rising bottom. I think it'll probably pull back and maybe go sideways for a bit. Keep an eye on that. Commodities, there you see the break of the downward trend line, sort of the pullback line in gold. And on the weekly chart, this looks more obvious because the longer-term trend line was kind of like this, and we pulled back to the trend line. And this is another important lesson. We ran away from the trend and we pulled back to it, and now it looks like gold trying to bounce off of it. So I'm more optimistic on gold than I've been for a number of months. Looking at the chart of oil, it's drifting to the downside. I don't see any reason to be bullish on oil right now. Fear has fallen with the election behind us. You see the fear chart is getting down to the lows on this time frame going back 8 months. And so I think that could be a bit of complacency. We'll have to keep a close eye on this. I think fear can come back again at any time if the overall stock market starts to break down. So we'll have to keep an eye out for that. So my ratings then, really no great concern anywhere, but lots of things to watch for. I'm neutral on both time frames for the US and Canadian stock markets. Gold, I've gone back to being bullish on both time frames, and oil, bearish on both time frames. Stocks showed some real resilience this week with a bounce back, but is that just a short-term bounce? Is that simply taking price back up to resistance where there will be another pullback in the near term? So traders should really take a short-term view and trade the trend line breaks as they happen. Watch for those. I've shown you how to do it. Gold has broken its pullback, oil is weak, and fear is falling. Well, now we're going to get on to the day trade of the week. Again, every week I just pull one of the day trades, usually from Friday, that we focused on in the active live service from Stockscores. And this week it is PLTR. The stock gave a bullish signal right here with my action candle. You can see the little pink dot there. That's our key indicator for a stock likely to go higher. In this case, the position size for every $100 of risk was 380 shares. That's just under $4,800 of capital. When you day trade, if you like to use leverage, you can leverage 3 to 1. That means $1,600 of capital for a 4.6 RR gain. That's a $460 gain, a 28.7% return on this one-day hold. And I alerted everyone in Active Live about this stock in the opening half an hour when it triggered its signal. All right, let's now do a Stockscores market scan in search of opportunity. The market scan tool is useful for finding position trading opportunities. And so we use this for those longer term trades. We're going to run the abnormal breaks US scan this week. And I click on that, and then I click on run market scan. And it goes through every stock listed in North America, and it found a number of stocks that meet the criteria of this strategy. I'm actually going to change the sort order here to number of trades. And there we have Aurora Cannabis, which is our first stock. And this was one of our picks on Thursday when it broke the downward trend line from a double bottom and was trading abnormally. We picked it as a day trade, and then at the end of the day, I suggested that it was probably decent to hold overnight. Well, overnight was great because it went up, I think, as much as 85% on Friday, finishing the day up 56% on Friday. So it's probably the best trade we had in Active Live this week. Moving along, anyway, I don't like that now. I think it's too late. MOGO. What I'm looking for as I go through these charts are stocks that are breaking from predictive patterns. They're all trading abnormally. They're all trading with strong volume, strong price action. But what I want to see is a good pattern. So here's an example of a pretty good pattern. This stock is breaking a downward trend line. You can see that it's built a rising bottom. So we know that a rising bottom is an indication of optimism. We're switching from pessimism to optimism. And then we had very strong volume on Friday with a strong price move. So that is a positive sign for this stock. Now, I have an issue with this one, and that is this lengthy trading range over here. The stock traded a lot of volume through the summer in that $4 to $5 range. And so I'm concerned that it's going to take a lot of volume to get through that price range. So I would give COTY a 6.5 out of 10, which means I think it has a 65% chance of working. So just continuing along, and this is really the process. It's pretty straightforward. You run the scan, and then you go through the charts looking for the patterns that I teach you to look for in the different education modules that we have in the members area of Stockscores. And you can go to the Stockscores website to learn more about that. And nothing on that page that I like. Now, we've got 8 pages. I don't know if we'll go through all 8, but see if I can find something else. So this one, I can see it's breaking out. It's not breaking from volatility or from low volatility. It is breaking from somewhat of a sideways trading range. So in that scenario, I like to take a look at a 3-year weekly chart just to see if this stock is just starting a trend or if it's well into one. This one is not just starting a trend, it's well into it. You can see the trend started with abnormal activity back here, abnormal price, abnormal volume from low volatility. It's now well into the upward trend. So I think it's a hold, but I wouldn't buy here. It's actually looking a little bit overbought right now because it's running away from the trend line. So we just keep cycling through and still don't see anything I love. Let me just take a look at this one on a 3-year. Breaking out, but not starting a trend. It's been going up for most of 2020. So I'm going to pass on that. We'll do one more page here and then we will call it a day. Now this is a process that I do every day using this tool, sometimes a few times a day, just running scans, looking for stocks that are coming alive from low volatility. That's really the key. So the CPS looks interesting on this time frame. Yeah, this one looks pretty good. So this is the weekly time frame now. And notice again, we recently broke a downward trend line. We're now building a rising bottom, and we're breaking from a rising bottom with some volume. Now, because this is a weekly chart break, I think this one may take some time, and so it's really more appropriate for a position trader, someone who's interested in holding this stock for months and not days or weeks. But I do like this one. As a longer term position trade, I would give this a 7 out of 10. All right, well, that is a good place to end. So I just want to remind you to subscribe to the Stockscores channel. It always helps the more viewers we have. Tell your friends as well. And then if you like this video and the content, please click on the like button, leave some comments. And most importantly, as you go into next week, trade well.